Hello there, what's up? Welcome to my channel. In today's video, I'll be giving you a recommendation of a stock you can invest in to give you a high return on your investment in the near future. Now, this is the kind of stock that will make you rich in no time. I won't just recommend this stock for yourself. I'll also look at the revenue of this organization, look at their balance sheet for you, go in depth, look at their competitors, look at what the industry is actually doing. I'll state categorically what the market cap of this organization is, their EPS, using different apps, and let you understand what's really going on with this organization and why I'm recommending this organization for yourself. So I encourage you to sit back, relax while I take you on a ride and make you see what's happening in this organization that I'm about to recommend for yourself. Now, if you're new here, I encourage you to please subscribe to my channel, hit that notification bell and smash the like button. So before I tell you about this stock, I'll also like to leave a disclaimer out there that whatever recommendation I give to yourself, you need to do your own due diligence because you may suffer losses at the end of the day. So do your due diligence. Don't take my recommendation 100%. Now, the stock I have to recommend for yourself is called Palantir Technologies with the ticker symbol PLTR. Palantir Technologies. Palantir Technology currently sits at $10.77. Now, this is what the stock closed at as at March the 15th, 2022. This is what they closed at. Now, before they closed at 10.77, if you can see, the market actually opened when they were 10.47, $10.47, and the previous close was actually $10.50. Now, this organization has a market cap of $21.864 billion, so that's the market cap there, and their earnings per share is 0.27. Now, the estimated target for this at the end of the year will be $15.05. So right now it sits at 10.77, which showing that this is an estimated target. So if you look at the chart here, you'll find out that this stock has been on a decline thereabout. Initially, as at last year, January 2021, Palantir actually sold for $39, and then they had a steady decline going forward, and just about 4 months ago, somewhere along September, November thereabout, they're actually selling at 28.77. There's a whole lot of stock in the technological sector that's actually being beaten down right now. Facebook, one of them. They have PayPal, one of them. There's a whole lot, and I will go into details in subsequent video on other stocks that are available at a deal right now, like this one. So right now Palantir sits here, which is at 10.77, and there's every opportunity for this stock to go back up. Like, I'm bullish about this stock, and I'll give you reasons why I'm bullish about this. Palantir Technologies, they actually build software that empowers organizations to effectively integrate their data, decisions, and operation at scale. So the organization was actually founded in 2003, and they started building software for the intelligence community in the United States to assist in counter-terrorism investigation and operation. So they later began working with commercial enterprises and try to see how they can help them access all their data in one place. They've actually grown their customer base. As of 2020, they only had 139 customers, but right now you can see they have 237 customers around the world. 237 customers, and they're actually operating in 50 countries right now. As of 2020, there were about 40 industries around the world, but now it's 50 industries, not country, 50 industries around the world. So that is a business needs money to operate, right? And one good sign of a business to actually show that they're operating well, it's the revenue coming into the organization. And as you can see here, this is year ended December 31st, 2021. However, in the revenue they've given us from 2019, what they've been making so far, and you can see that in 2019 they generated just $742 million, and the following year they crossed the billion mark, and they raised almost 1.1 billion in revenue. That's what they generated. That is in 2020. So you can see the massive increase from 742 to over $1 billion. And then from 2020 to 2021, they generated over $1.5 billion. If you look at it, they have a net loss of $520 million. Now, Palantir is not yet a profitable organization. They're unprofitable. So they have a net loss of 520 million. And if you look at the good news about this net loss, that they're actually bringing it down. Compared to 2020, they had a net loss of over $1 billion. And right now, they've brought that down to 520 million. So in no time, if they keep going this way, they will break even soon, and then they'll start generating profit going forward. Now, if you look at their balance sheet, look at the current asset against the liabilities they have. And the total asset they have is what? Over $3 billion. Total assets, and that has increased since 2020, where they were sitting just above $2 billion. Yeah, and if you look at the liabilities of this organization, total liability is 956 million. So if you compare their assets against their liability, you see that they have enough resources to cover their liability. They have enough asset to cover their liability. So even if they're in debt or whatever, they have enough asset that will cover this, which is a welcoming idea for an organization like this. Although they are being beat down to 10.77 right now, you can see the decline here. However, what their balance sheet is actually telling you is different. It's telling you that they are in a good shape. Financial, they're in a good shape for you to actually invest in this organization. What are the risks investing in this organization? But before I tell you the risks involved there, if you're new to the channel and you're still not subscribed, hit that subscribe button, smash the like button here because it does help the YouTube authority, and don't forget to hit that bell so you get notified when next I'm giving another video like this. So without wasting much of your time, I'll go back in. Now, this is the risk factor, a summary of the risks in the organization. They let you understand that they've incurred losses each year and they may not become profitable in the future. So they've told you that every year they incur losses since they've been in existence. It's not that they won't be profitable in the future, although they cannot guarantee that, but they've made you understand that we've been at a loss ever since. So if you want to invest, you know what you're doing right now. And to be honest, they're not the only ones that has been like this. Like Netflix, it took Netflix donkey years before they even broke even. So that's one thing you should actually understand. They're not the only one. Now, the second one there is that they may not be able to sustain revenue growth rate. We can see the trend right now from 2019, 2020, 2021. It's been upward revenue. They've been generating a whole lot of revenue, and they've actually invested in sales and marketing right now to get more money coming in. However, they cannot guarantee sustainability in that. And we understand that things can happen anytime. Just like 2 years ago when we had the pandemic, a whole lot of organizations that were doing very good actually stopped generating money. And some organizations went bankrupt, especially those in the sports sector. Like the club I follow, Barcelona, were hit the most because fans couldn't come in, we couldn't get tickets anymore, and it started affecting the business itself. So these are things that can actually impact revenue. So we understand that fact. Now, they also talked about their sales effort take considerable time and expense, and their sales cycle is too long and unpredictable. That is one thing you should also know. So these are like the top 3 stuff. Now, in effect of this, their sales effort taking so much time, is a software business. It's not just a software where you can buy for $100. It's not a software you can buy for $200. When they go all out, they go all in, and they look for an organization that pays millions, so they tie them down. So it's like an overhaul of what organizations have been using to actually get theirs involved in. So it takes a whole lot of process. They need to like finalize, make sure that everything goes into normal before they can finalize the sales. So it takes a whole lot of time, and people can actually pull out easily even when they're halfway through. Like, I've been in sales for years and I know how it is. Sometimes you feel that you've got that customer and all of a sudden you lose that customer. So it does happen. So I will encourage you, like I said, do your due diligence, look into this stuff yourself. Just go on their website, palantir.com, and download the annual report. You'll see all the risks involved. There's a whole lot. They haven't talked about the pandemic. They talk about intense competition in our market and the whole lot, which will lead me to the next one, which is about their competitors. Who are their competitors? So if you look at Palantir Technologies, their competitors is the likes of Tyler Technologies, Verin, Tableau Software, Splunk, Musigma, Cognizant. So these are their competitors right now. And you find out that Palantir was founded in 2003, and the oldest on this list is Tyler Technologies, which was founded in 1966. You also have the likes of Verin and Cognizant, founded in 1994. And so far, they're all based in the US. Now, one thing about Palantir, the competitive advantage is that they've decided that they will stick to the US Army only. Like, their software is not made for other markets like China, India, Russia, and the likes. They've taken side already. Now I'm talking about Gotham. Gotham is only designed for the US Army and its allies, which is NATO, the EU, countries that are aligned with the US, basically. So they've taken sides already. If you look at revenue coming in, they're actually at the same level with the market sector, like 1.1 billion, 1.1 billion, 1.3 billion, 1.2. The only people generating so much money is Cognizant, which is 16.7 billion, and they've been in business since 1994. Now this is as at 2020, yeah. And if we go further down, we'll see that when it comes to funding, there is about 3.1 billion in funding, which is welcoming. So these are their competitors for you to see. Now, just for me to have clarity again, one more thing I want you to understand is for you to look at the balance sheet and the cash runway. For this, I'll use a different app I actually use to analyze stock, which is Simply Wall Street. I have here Palantir Technologies right now. As you can see from the analysis being done by Simply Wall Street, they tell you that Palantir is trading at 28.6 below the estimate of its fair value. Earnings are forecast to grow 71.72 per year, which is earnings, and revenue grew by 41.1 over the past year. So it also tells you that shareholders have been diluted in the past year. So we're looking at the financial health here. Like I said, I know I've looked at the short-term liabilities, long-term liabilities, their debt level, and reducing debt with the cash runway. If you look at it here, their assets is far greater than their liability, just like I told you looking at their financial statement. And also their short-term liability, their short-term asset exceeds their short-term liability, and their long-term asset, their short-term asset exceeds their long-term liabilities, which means they have enough cash to cover whatever challenges they may be facing in the future. Also, it tells you that they are debt free. So Palantir is in no debt. They owe nobody. So they have enough money to run their business, and they've had no debt in the last 5 years, if you get what I mean. So if you look at the balance sheet, it's all green. They owe nobody money, and they have enough cash runway. Look at stable cash runway. While the organization is unprofitable, it has sufficient cash runway for more than 3 years if it maintains its current positive free cash flow level, and forecast cash runway that is in the future. Despite it being unprofitable, it has enough money that will take it for more than 3 years due to free cash flow being positive and growing by 85.6% per year. So that is one thing you should see, that Palantir is a good business. They have enough money to weather the storm, push the organization forward, and this is why I'm recommending this organization for yourself. But like I always say, do your due diligence and don't just take my word for it. I do have some shares already in Palantir, and I'm planning to buy more, although I'm not buying in this month because I do have other investments I'm doing right now that needs money, so I don't want to like rush in to buy right now. But I'm thinking that in the next month or two I'll be adding Palantir to adding more shares to the one I already have in existence right now. The last time I bought Palantir was at 21.6. That was when I bought Palantir, and it has since fallen down, but I'm not panicking. If you're new to my channel, I'll encourage you to subscribe to the channel, hit that notification bell, and smash the like button. More of this kind of videos will be coming in your way every week, one of these. I know it's a long video right now, and this is because I want to go in depth with yourself and analyze everything possible for you to see before you make a decision. And do not forget, do your own due diligence. Do not just take my word for it. And that's it. Have yourself a wonderful day. Bye now.